Hi, Assalamualaikum and good day everyone. Today we will present our financial management assignments. Our group chose insurance industry for this assignment. Before we start, I will introduce our group members. First, Siti Nurfatin Zulaika binti Mohtar, metric number 294911. Next, Putri Nurul Aini binti Esa, metric number 286541. Then, Alice Chong Shining, metric number 293596. Next, Muhammad Shauki bin Cik Muda, metric number 291213. And lastly, myself, Anur Nabila binti Syamsul Azman, metric number 295122. Let's go through this content together. First and foremost, we have introduction. Next, company's details. Then, liquidity ratios. Number 4, we have asset management ratios. After that, leverage ratios. Continue with profitability ratios. And Tobin's Q's and market value ratios. And lastly, conclusion. For introduction, point number 1, resilience and innovation. In 2017, the insurance industry showcased resilience and innovation amidst economic fluctuations, regulatory changes, and technological advancements. Next, global impact. Fortune Global listed insurance giants played a vital role in the global economy, managing trillions and safeguarding personal and corporate assets. Robust models. Despite challenges like low interest rates, insurers reported growth, showcasing robust business models and strategic foresight. Technological adoption. The industry saw a tech surge integrating AI and big data for risk assessment and customer insights. Lastly, market expansion. Market expansion, which is insurers diversify into emerging economies, navigating changes regulations for consumer protection and industry stability.
First company that our group have choose is China Life Insurance. The origin of the company is Beijing, China. The objective of this company is to provide services in life protection, savings and annuities. Main business for this company is life insurance, and the sub-business are provide services in wealth management, annuities and the retirement planning. Next, the CEO of this company is Mr. Liu Yujin. Lastly, CSR activities for this company related to the core business activities and involved in both long-term and short-term projects. Second company is China Pacific Insurance. The origin of the company is Shanghai, China. The objective of this company is to contribute to the development of a vibrant. Main business for this company is life insurance, and the sub-business are provide services asset management, investment management and consulting services. Next, the CEO of this company is Kong Kin Wei. Lastly, CSR activities of this company related to the core business activities and involved in both long-term and short-term projects.
The third company is Nippon Life Insurance, founded in 1889 and headquartered in Osaka, Japan. The main objective of the company is co-assistance, co-prosperity and mutual assistance, which is closely related to the well-being of the people, whose understanding and trust are indispensable for the development of a life insurance company. Nippon Life Insurance offered a range of services, including life insurance business and asset management. They also provide credit guarantees, sell investment trusts, and manage and administer defined contribution pension plans. Their CEO is now Horishi Shimizu, and all their CSR activities are related to their core business activities and include both short-term and long-term programs. Next company is MS&AD Insurance, which was founded in 1980 at its headquarters in Tokyo, Japan. Its main objective is to contribute to the development of a vibrant society and help to secure a sound future for the planet. The company operates a domestic non-life insurance business, as well as financial services, risk-related services business, international business, and domestic life insurance business. The current CEO is Noriyuki Hara, and all of their CSR activities are related to their core business activities, including both long-term and short-term programs.
Next, I will present about two companies, which are Sumitomo Life Insurance and Kate Life Insurance. First, about Sumitomo Life Insurance, this company origin in Japan. The objective is to promote the well-being of the business partners, employees, and other stakeholders, and ensure sustainable future. The main business is insurance life, Sub-business are share value insurance, comprehensive protection insurance, income assurance insurance, specific disease insurance. The CEO of this company is Yukinori Takada. The CSR that related is to core business activity and also related to long-term and short-term. Second, Cathay Life Insurance. This company origin in Taiwan. The objective is to bring stability and happiness to society and spur sustainable growth in the industry. The main business is life insurance. Sub-business are protection insurance, endowment insurance, group insurance, micro insurance, and also travel insurance. The CEO is Shang-Chi Liu. The CSR related to core business activity and involved in long and short terms.
Dai-ichi Life Insurance located in Tokyo, Japan. Chief Executive Officer for this company is Tetsuya Kikuta. Objective this company is to protect and improve the well-being of all. Main business Dai-ichi Life Insurance is life insurance. Meanwhile, sub-business is asset management. Total members in Board of Directors Dai-ichi Life Insurance is 14 people. For the corporate social responsibility (CSR), Dai-ichi Life Insurance related to core business activities and involved in both long-term and short-term projects. People's Insurance Company of China located in Beijing, China. Chief Executive Officer for this company is Mr. Wang Pingke. Objective this company is to make PICC a reliable and excellent brand. Main business for People's Insurance Company of China is insurance business. Meanwhile, sub-business is asset management and life and health insurance service. Total member in Board of Directors for this company is 10 people. For the corporate social responsibility (CSR), People's Insurance Company of China related to core business activities and involved in both long-term and short-term projects.
The Alliance Insurance. This company origin located at Munich, Germany. Their objective is to secure your future. The main business for this company is insurance and asset management. The Alliance Insurance doesn't have any sub-business. They have 9 total members in Board of Directors. The CEO for this company is Oliver Bate. The CSR activities related to core business activities and they involve in both long-term and short-term projects. The Samsung Life Insurance. This company origin located at Seoul, South Korea. Their objective is to protect clients and their families with complete annuity, health, and life insurance solutions. The main business for this company is life insurance, health insurance, and annuities. The Samsung Life Insurance sub-business is asset management services. They have 3 total members in Board of Directors, and the CEO for this company is Mr. John Yong-mo. Same goes to the Alliance Insurance. The CSR activities related to core business activity, and they involve in both long-term and short-term projects. Current ratio. Current ratio formula is current ratio equals to current assets divided by current liabilities. The definitions for current ratio is company's ability to repay short-term loans with current assets, indicating its capacity to meet immediate obligations and commitments. The best company for current ratio is Sumitomo Life Insurance, and the worst company for this current ratio is Alliance Insurance. Quick ratio. Quick ratio formula is quick ratio equal to current assets minus inventory divided by current liabilities. The definitions for quick ratio is company's ability to cover immediate liability with its most liquid assets excluding inventory. The best companies for quick ratio is People's Insurance Company of China, and the worst quick ratio company is Nippon Life Insurance.
Day sales in receivables is the debt to assets ratio, which is computed as the total debts divided by the total assets, is used to compare a company's assets to debt. This ratio shows how well a business can use its assets to cover its liabilities. Formula for this ratio is 365 days divided by receivables turnover. The effectiveness of insurance companies in collecting past due receivables is demonstrated by the day sales in receivables data spanning from 2017 to 2021. Within the initial cohort, China Life Insurance exhibited a comparatively steady pattern, rising from 10.17 days in 2017 to 12.16 days in 2021. Meanwhile, China Pacific Insurance consistently displayed a decline from 19.09 days to 17.04 days, signifying enhanced efficiency in collection. The receivable turnover ratio is a financial metric that measures how efficiently a company collects cash from its customers. It is calculated by dividing the company's net credit sales by its average accounts receivable over a certain period. This ratio indicates how many times a company collects its average accounts receivable and can be used to assess the effectiveness of the company's credit policies and collection efforts. Sumitomo Life Insurance has the table's highest figure in 2017 with a 645.86, suggesting a strong market position at the time. However, there is a sharp decline to 203.1 in 2022, marking the lowest point, which, as with the other companies, could be tied to the broader economic disruptions of the pandemic. People's Insurance shows the least variation among the companies listed, with the highest figure of 5.51 in 2017 and a lowest of 4.2 in 2020. These companies' figures suggest a relatively stable financial position with minor fluctuations, possibly indicating a consistent business model or customer base. Inventory turnover measures how often a company replaces inventory relative to its cost of sales. Generally, the higher the ratio, the better. A relatively low inventory turnover ratio may be a sign of weak sales or excess inventory, while a high inventory turnover ratio suggests strong sales. This ratio is only useful for comparing similar companies because the ratio varies widely by industry. The total asset turnover ratio can be used as an indicator of helping investors understand how effectively companies are utilizing their assets to generate sales. Formula for this ratio is net sales divided by average total assets. The higher the asset turnover ratio, the better the company's performance, which means that the company is earning more revenue by using its resources best. Among the 10 companies listed above, the highest total asset turnover ratio in 2017 was 0.56 times for Dai-ichi Life Insurance Company. On the other hand, Samsung Life Insurance recorded the lowest total asset turnover ratio of 0.06 times, 0.05 times, 0.05 times, 0.05 times, and 0.06 times respectively in this 5 years compared to other companies. The efficiency with which a business generates sales from its current fixed asset may be determined by looking at its fixed asset turnover ratio. Net sales are divided by the average balance of fixed assets to get the fixed asset turnover ratio. A greater ratio suggests that management is making better use of its fixed assets. Among the 10 listed companies, a company that has a higher gross profit margin in 2018 is Cathay Life Insurance with 4.54%. Meanwhile, the lowest gross profit margin is MS and AD Insurance with 4%. A high gross profit margin indicates that a business is doing well, while on the other hand, a low margin suggests that the company needs improvement.
Firstly, I will briefly explain about the total debt ratio. The definition and use of the total debt ratio is used to compare the assets to the debt of a company. Besides, it also indicates a company's ability to cover its liability by the assets. The formula for this ratio is total liabilities divided by total assets. The best company for total debt ratio is Sumitomo Life Insurance and the worst company is Nippon Life Insurance. Next, I will explain about debt to equity ratio. The definition and use of debt to equity ratio is used to compare the equity to debt of a company. Besides, it also indicates how much a company relies on the debt to support its operation. The formula for this ratio is total liabilities divided by total equity. The best company for debt to equity ratio is Sumitomo Life Insurance and the worst company is Nippon Life Insurance. Lastly, for the leverage ratio, I will explain about time interest earn ratio. The definition and use of this ratio is to indicate the ability of a company to pay all interest on business debt obligation based on its current income. The formula for this ratio is earning before interest and tax divided by interest expense. The best company for total time interest earn ratio is MS and AD Insurance and the worst company is People Insurance Company of China.
Gross profit margin is expressed as a percentage and can be calculated by dividing gross profit by sales, where gross profit is profit subtracting cost of goods sold. A high gross profit margin is desirable and means a company is operating efficiently, while a low margin is evidence that there are areas that need improvement. The data shows that the highest average gross profit margin recorded from 2017 to 2021 was for Cathay Life Insurance at 412.83%, while a lowest average gross profit margin was recorded by MS&AD Insurance at 5.27%. Net profit margin measures how much net income or profit is generated as a percentage of revenue. The net profit margin helps investors assess if a company management is generating enough profit from its sales and whether operating costs and overhead costs are under control. For example, a company can have growing revenues, but if its operating costs growing faster than its revenue, its net profit margin is expected to shrink. Over the 5-year period, the highest average net profit margin was achieved by Cathay Life Insurance at 742.36%, while the lowest achieved by MS&AD Insurance at 3.26%. Return on asset is a financial ratio used by analysts to see the capabilities of a firm using its asset to generate income. The higher the percentage of return on asset indicates the more efficiently a firm uses its asset to generate profits. For the period from 2017 to 2021, the highest average return on asset is Cathay Life Insurance at 75.29%, and the lowest is Nippon Life Insurance at 0.35%. Return on equity is a financial ratio used by analysts to see how efficient the firm is generating income through its equity financing. This ratio also shows that how much the shareholder gets for the capital invested in the company. Firms that have high ROE will be a desirable choice for the investor to invest. People Insurance Company of China has the highest average ROE ratio of 163.40%, while Nippon Life Insurance has the lowest of 0.45%.
Next, I will present about Tobin-Q ratio. The formula of Tobin-Q ratio is market value per share multiplied by number of shares outstanding plus total liability and divide by total asset. This ratio is to measure of the market value of a company or a market to its asset value. From the cooperation ratio in the report, we can conclude that the best company is Allianz Insurance, since this company has the highest ratio in every year since 2017 to 2021. And it can be considered as demonstrating strong market performance because this company has enough assets to cover equity requirement. Besides, the worst company for Tobin-Q ratio is for People Insurance that show the lowest value among 5 years. Next, I will present about market value ratio. This ratio can be divided to two categories, which are earning per share and price per share. First, the formula for earning per share is net income divided by number of shares outstanding. This ratio used to indicate how much profit that the company produces for each share of its stock. From the report, we can conclude that the best company among 5 years is China Pacific Insurance, since this company show increase from 2017 to show increase from 1.61 in 2017 to 2.77 in 2021, indicating profitable trends. The lowest ratio is People Insurance among 5 years. About the price-earning ratio, the formula is price per share divided by earning per share. This is used by investors to compare the value of a company's share price to earning per share. The best company that show a good ratio among 5 years is Nippon Life Insurance, that maintain a relatively stable price-earning ratio, and MS and AD Insurance show modest increases.
For the conclusions, the insurance industry, as per the Fortune Global Rankings in 2017, was notably represented by several prominent insurance companies. The featured companies showcase a substantial global presence and financial strength, indicating the stability and growth of the insurance sector during that period. These insurance companies achieve high rankings, underscoring their importance in the global economy and emphasizing their robust revenue figures. Their rankings highlighted key players in the insurance industry, illustrating their pivotal role and influence on the global economic landscape. The high rankings were reflective of these companies' expansive market reach, further emphasizing the significance and impact of insurance industry on a global scale in 2017.